How do you define wealth creation in the context of Dubai real estate?
The important factor here is to embark on that journey as soon as possible, because every day you're contemplating on it, you're losing out.
What stops people from starting in the first place?
People have 3 to 4 problems. Either they're very complacent, or people think they have a lot of time.
I won't do it because the market is about to collapse.
Has that delayed you from anything else except for making smart investment choices? Find a strategic business partner who would help you. People procrastinate a lot. You will tell them, okay, this is a launch that's going to happen next week, and they will keep on procrastinating about it. Okay, I'll think about it. By the time they think about it, the launch is gone. The first diversification is to diversify between ready property and off plan. 75% of your fund should go to a ready property, and 25% still should go to an off plan.
Hello everyone, this is another session of the Brick Buzz. Today what we're going to do is we're going to have a continuation of a previous discussion that Mr. Asim had with our colleague Faiza about wealth management. Since that was an introductory sort of an episode, we covered topics like account creation and
That
mortgages.
was the basic initial start.
That was the initial start because, of course, the first question is always, what does a non-resident do when they come here? What does a resident do? What if you're salaried? What if you're self-employed? So there's many processes that go into it, and that's what these guys discuss. Today, we're going to dive a bit deeper into the subject of wealth creation, wealth building, in the context of Dubai real estate. I'd like to begin because you deal with such a different profile of buyers, and you've been doing that for such a long time. When it comes to real estate, it's not just about selling property. It's about, like you said, like in a boutique firm, that's what you do. You do everything.
And it's not just selling properties. Everybody is I'm not undermining the importance of converting a deal and selling some property. That's the ultimate goal. But deep down, if you have a customer-centric approach, your idea would be, I'm not here to sell you something. I'm here to realize your dreams and helping you buy something that you would like. Mm-hmm. So for me, that is not just a clever play on words, but actually a thought process and a philosophy that you have to follow. And if you follow that philosophy, everything will fall into place and money will follow.
Because that's how you actually build a relationship. Yes. It's not just a transactional
It's a farmer approach. It's not a hunter approach where you just cold call somebody, say, I have this property to sell. I have this property to sell. Not what you want to buy. And I would like to try and push this to you. Mm-hmm. If it works out, perfectly fine. If not, I'll move it to another client. Mm-hmm. That's the hunter approach. I'll close the day and sell this property to someone and then be done with it. Whereas a farmer approach, you invest in your client and you invest your time and energy into nurturing that relationship. And once that relationship is blossomed into something which is a worthwhile transactional business, that is the time when you actually have sustained growth of your organization.
Agreed. Let's go into definitions. How do you define wealth creation in the context of Dubai real estate?
Okay, wealth creation for me is simply the process through which you can generate financial growth and increase their asset value of whatever assets you have. So first of all, you generate and then you grow your assets. So you can start with a very, very cautious approach of buying something which is relatively just being launched under $1 million dirhams, hovering around $500,000. I wouldn't advise it, but if you have a long-term vision. The important factor here is to start with that process, to embark on that journey as soon as possible. Because every day you're contemplating on it, you're losing out. That's the only thing. Gathering financial information, putting that to use, start generating that revenue, invest in the properties, invest in real estate, and then start getting the rental income, and then at an appropriate time, according to the market dynamics, shuffle that property. Once you have a couple of them established with you, once you have a couple of properties already purchased, then you go for leveraging and all those strong concepts that are there in the market.
So what stops people from starting in the first place? People in their 30s, their 40s don't own properties, people like me. But what is it that's stopping? Other than, of course, availability of money. Some people have money.
Availability of money is, again, not an issue. We have discussed, you can invest in Dubai real estate for as low as 2,000 dirhams. So if you even don't have 2,000 dirhams set aside, it's not. So people have 3 to 4 problems. Either they're very complacent, who will go into the hassle of doing this and getting this like portfolio or talking to people. I'm very happy. I'll do it one day. Or the second problem is that people think they have a lot of time. Let me enjoy this time. Let me just party. Let me just go out, have fun. There will be time when I'll sit on it and do this and that. So that is. Or people overthink a lot. They would overthink. Is this the right time? Should I wait? Is the market going to collapse? What is going to happen? In 2008 this happened, you see, and then this happened, and I took advice from this person and he said this. Why are you, when you want to buy a Ferrari, you don't take an advice from a guy who's driving a Yaris. Nothing demeaning against these two, but that's a hardcore fact.
But speaking about market collapsing, I think you and I know that the market has been collapsing for the past 4 years.
No.
But that's what people think. I won't do it because the market is about to collapse. It's been about to collapse for the past 4 years, hasn't it? From that perspective.
Heavens are about to fall.
Yeah.
So has that delayed you from anything else except for making smart investment choices? Everything else, you'll continue, the life continues as it is.
Has that delayed your travels? Has that delayed your big family weddings?
Somebody wants to get married, they will have the most lavish functions. If the world is about to collapse, why are you having this lavish function? I mean, what's the rationale behind it? But it goes. You can't convince them. And then people do overthink a lot, right? They would think, I have to make an investment. I'm just waiting for the appropriate time. I'm just waiting for the right time. And the definition of that right time, I've never gotten it.
People don't want to fail in big investments.
Big investments is basically when you go for higher amount of investments, those are not first time buyers generally. Those are seasoned individuals and they've reached by taking certain amount of risks. Now, I'm not asking people to take blind risk, but calculated risk people do take. High risk, high reward. Until unless you're willing, people who took the risk on Burj Khalifa when it was being launched, people who took the risk on Palm Jumeirah. So people need to understand that what Dubai is about. Now, who do you talk to in that decision-making process?
You talk to a real estate broker.
You talk to a real estate professional. You talk to somebody in the financial industry. If you talk to your uncle, that should not be the defining criteria. I think nothing against somebody's uncle.
I think most people spoke to their uncles post the 2008 crash. I remember so many properties that were over leveraged and lying in banks and their owners couldn't pay up. The people who decided to not sell then are pretty happy now. Burj Khalifa or anywhere. There's so many properties that are,
you see,
they didn't sell. They didn't forfeit the properties. They were, a couple of them were behind bars for not being able to pay. But they didn't take that action.
People should, you see, then that depends on when everybody is buying, that's the time you should sell. When everybody is selling, that's the time you need to. So it depends on your financial muscle, depends on your cash outflow, how much you can leverage that. All these factors, people don't do research. Now, let me tell you, find a strategic business partner who would help you in this process. People procrastinate a lot. They will take, you will tell them, okay, this is a launch that's going to happen next week. This is something that's going to happen 10 days or 15 days or 1 month from now. And they will keep on procrastinating about it. Okay, I'll think about it. By the time they think about it, the launch is gone. And then they will say, can I get a unit? I saw that this was the process, or the property was initially offered for, let's say, 2.5 million. They say, I want 2.5 million. Boss, that was 6 months, 8 months ago. It's not 2.5 million anymore. All those units have been sold out. No, since it was launch, I missed the boat, but I would put everybody else in problem in getting that unit. Okay, you call. Then you need to have a clearly defined vision of what you're going to do. Short term, mid term, long term. Have a plan. Sit with somebody, because you're not talking about just buying one property. You're talking about wealth creation and wealth generation, and that should continue, and that should be the culminating point is generational wealth. Right? So you start on the lighter side. People say, oh, if my great grandfather didn't sell that plot or didn't do that at that time, or should have done this, because the grandfather or whosoever was at the helm of where that person at that time took a decision. They should also take a decision at this point in time. Now, all these factors combine your risk-taking appetite. So there are a lot of factors.
I wanted to talk about generational wealth, but I think the way the flow of the conversation, I think it's too early to talk about that. I think we're still talking about people who want to enter the market, and that's a good idea. There's a lot of...
That's a first-time buyer.
First-time buyer, right?
That's a first-time buyer.
Who has to start thinking about it, and I kind of want to keep this conversation along those lines, because
perfectly fine.
That's people who have money, they do want like high-value transactions and bigger luxury properties. They are an enticing proposition.
They're enticing for the people who are actually accustomed to that. So now, for example, somebody who wants to put in 15 million or 20 million dirhams, Palm Jabal Ali launched at 17.5 million dirhams, goes up to 24-25 million dirhams. Anybody who is investing that amount knows very clearly what they want in life. What kind of, they're not just buying a property, they're making a lifestyle choice.
Right.
They exactly know where they want to invest. They exactly know which type of villa they want on that front, which front they want, facing which side they want. Everything is very crystal clear to them. Now, you can add value by bringing logic to the table if at times that is required. But that is the extent of it. Now, you should be very clear in your communication as a real estate professional when you're talking to them. Okay, you want this to be on the palm, perfectly fine. Is this for yourself? Is this for your investment? Is this for your next generation? Is this the only property you're going to buy? What is your cash outflow going to look like this year? So the down payment is going to be this much. The first year, this is going to augment that down payment cash outflow. So for the first year, for the second year, for the third year, for the fourth year, this is going to be your cash outflow. At the end of the project, this is going to be your cash outflow. 40% you have to give at the end, 60% during construction. Perfectly fine. This 60%, the split is according to this. Done. Which unit? I would recommend this unit based on this logic. Then they would decide. But they're more clear-headed rather than a person who says, I want to have, I have 500,000 dirhams and I want to buy a studio unit. Why? Because I want to start the investment journey. Perfectly fine. That hand-holding is required more at times, because a person who is entering for the first time is quite jittery. And then he has been talking to a lot of people and has been receiving a lot of input. So what you have to do, you have to learn a lot of things. That individual who's embarking on the journey has to unlearn a lot of things which he has been hearing. That is the most difficult task I've seen in real estate investments.
But do you think those people who are buying that Palm Jebel Ali, who are making a conscious lifestyle choice or whatever it is, do you think they don't have a risk? They're not risking something? Because that's what
But the
newbie investors' point of view could be, oh, those people, they have money, they're not. They think that those people are not taking a risk.
Appetite for risk taking.
The
appetite is bigger. Number one. Second thing is, they have been ardent investors in real estate in Dubai, and they know what Dubai is all about. They're sold out on Dubai. A new person who comes and says, I want to invest in Dubai, they would like to, first of all, they need to read up or talk to somebody about Dubai. Why Dubai? I mean, this is a very cliche question. Why Dubai? There are 101 reasons. Where the economy is going, where the safety security is going, how the Dubai is progressing. It's all about future and what the future holds for Dubai. Have somebody informed you about that? Or you consider Dubai from the eyes, you're looking at Dubai from the eyes of somebody in your family who came here once 15 years ago, 10 years ago. I've met people like that. You will be astonished. At times, you would not believe what I'm saying, but there are people in this journey who say, yeah, this information I got from my uncle, or from my father, from my elder brother, from my sister, anybody in the family, any relative. My aunt used to live here back in 2018 or 2016. This is the end of 24. Dubai has moved ahead leaps and bounds. Are we aware of it? Are we, like, for example, it's equally important for me to know which direction your journey is going to take you, because I, as a real estate professional, will help you navigate that journey. Simultaneously, you as an investor need to understand which direction Dubai's growth is taking, what direction it is taking, where it is heading, what are the milestones that are supposed to be achieved. And once those milestones are being achieved and you see the physical manifestation of that, your confidence in the city would go leaps and bounds. But for that, you need to deep dive, you need to do your research, you need to select a real estate professional that is actually going to help you in achieving that.
Love it.
See?
Diversification. How important is it within the real estate portfolio, and what types of properties should one consider? Now, we can obviously, it's a broader question, but we can divide it into, let's say, value brackets, say 1 to 3 million, 3 to 5.
I'm not going into diversification. Has two parts. Residential properties, residential real estate, and commercial real estate. Commercial has further retail or office spaces and all that, and you can buy a whole building, you can buy commercial ventures, you can buy restaurants, clubs, all those things. The first diversification that anybody needs to do is to diversify between ready property and off-plan. That's the first diversification you need to do. So there is a cycle that you need to invest. I have 5 million. Okay, I'll put 30% or 35% into off-plan. If I say no, I need that rental income, and even if I don't need that rental income, a lot of times people say, I've seen projects being delayed and I don't want to invest my money there. That's the mindset that I have, and I would prefer are only ready properties, I would say go ahead with it. But anything that has been realized, there's a chance of capital growth is not that great as for an off-plan project. So if you want to build
especially in this market, especially in the current conditions, there's a bigger chance of capital growth in off-plan when you
110%. You see, for example, DMAC has launched its DMAC Islands. First phase. Every phase would have a different price point. Phase 2 would have a 6 to 8% at least growth, and then phase 3 will have a 6 to 8% price augmentation on phase 2. So by the time you reach phase 8, you already have 64% or 50% at least price hike from the initial launch value. So that's number one. Now, initial purchase price is around the average, it starts from 2.2 million, it goes up to 2.8 for a 4-bedroom townhouse. I'm giving you a very specific example. So the average value is 2.4 million. Now that 2.4 million, if you invest, do you think a 4-bedroom townhouse, now the ready units are being sold for anything around 4.5, 4.6?
that's what they've been
That's what the ready units are being sold now. So by the time your unit is ready, its starting price
for
was
a brand new property
for a
and
brand
not
new property
a 15
in a
year
master community. So even if you don't get 4.5, you just talk about 4 million. So from 2.4 to 4 million, it's a substantial jump, right? That is only going to be materialized if you invest right at the time of launch or even pre-launch for the selection of best unit. Now, if you procrastinate at that time and you say, okay, no, I will let it build, and then, so the price has increased. The first phase will be delivered after 3 to 4 years. So that 4 years price increase, the new buyer has to pay for that, right? Because he's paying for that because he entered the market at that time. I'm not going into the reasons. Maybe it's a genuine concern. I did not have the money to start with it or something like that. But when they reach at that particular time, they enter at that particular time, that is the extra amount they're going to put in. So always remember, in a real estate transaction, like when you want to build your portfolio, again going there, 25% of your income, up to 25, is going to be from rental yields over a period of time, not initially. 6 to 8% return, then 4 to 5 years, you're going to get that much. Your capital gain can be anything between 50% to 250%. And we have seen MR projects. MR, anybody who invests, they say, okay, MR started at 1.92 million, and then the unit was sold later on at 4.5. Look at Madinat Jumeirah. Madinat Jumeirah, a 2 bedrooms was launched at Madinat Jumeirah Living at 3 million, 3.2 million, 3.5 million, sold at 7 million. A 3-bedroom was initially announced for 4.85 million, going up to 6 million, bigger units. It sold for 9.8 to 13.2 million. So look at the price appreciation there. It's a huge increase. Keeping in view that if you get 100% there, then 25% you get from leveraging over a period of time. So capital gain or capital growth is one thing that investors need to concentrate on, because majority of them have a mindset, because wherever they're coming from. So the first thing they need to do, any new investor, is to unlearn whatever they have learned in their own countries, in their own cities, in their own scenarios, and understand Dubai, because they have a preconceived notion. They come and apply the same notion here and make their buying decisions based on that notion. I'm going to buy something which is ready in, for example, Sports City. I'll buy a 1-bedroom apartment, will cost me 700,000. Very good. I'll get a decent amount of rent. Perfectly fine. 5 years down the line, do you think the price is going to be doubled for Sports City? There's nothing exciting for that project, which was built in 2014. This is 24. It's already 10 years old, that building. There's nothing exciting coming on there. At the most, what will happen is some new mall nearby or metro connectivity. That is it. The newer, because it's perfectly fine if you want to have just the rental income, because say, I have this income and I need to put it in the bank. If I put it the same amount in a bank overseas from where I'm coming, I will be hit by inflation and I will be hit by currency depreciation. Here, these two things were not going to affect me, so I'm going to put my money there perfectly fine. But if you're looking for generational wealth, if you're looking to grow your portfolio, then you need to have capital gain as a major pillar of that decision-making process.
How does that capital gain happen on that Sports City apartment? You have to upgrade it, then sell it. Is that what? How do you add value?
Even if you upgrade it, it will go from X to Y. From 700, it can go to 1 million maximum. That is it. Because the person who's going to come, the next person who's going to come, it is an affordable property. It is not a address hotel. It's not, the starting price is not 2.4. It's not a beachfront community. It doesn't have those amenities like address downtown. So it is an affordable property. Even if you put like the best quality marbles and everything, the people who are going to invest in this building, in that community, will be concentrating on affordability of that property. Right? Will your tenant, who's right now trying to manage his life within a certain amount, because he has also come here for the first time, or he has spent just basic couple of years here, he's trying to build himself as well. That tenant, is he interested in your Italian marble or the beautiful Miele kitchen that you have? He will not be, and he will not pay you accordingly. So even if you put a lot of things in that property, the property value is only going to increase by a very slight amount.
Yeah, it's difficult to decide, like for somebody, let's say in 2012, for somebody going out and buying in Sports City, it was difficult to know that it will not turn into much.
No, it did. What was the entry point? Two things: the entry point and the entry price.
Okay.
So, for example, they bought it at 400,000 dirhams. Right now, they can sell it for 700,000, 750. The price has doubled, but now it's reached to its ceiling. If you're an investor, you should know that what time I need to, I wouldn't say exit. I don't like that term. I would like to use the term redirect my sources somewhere else. So I need to take out from here and invest. So what the cycle I recommend, it's very simple. You buy something which is off plan, you buy something ready, and you say, Asim, I want my annual 12 to 15% returns. Perfectly fine. 3 years down the line, my property is going to be ready. The one that I bought off plan, I'll put it on rent for 2 years. This property that I bought ready is going to be 5 to 7 years old with me. I'm going to recycle it, put the money in another off plan. And I'm going to, first of all, do two things. Is to increase the threshold beyond 1 million. So if I started from 500,000, 600,000, I'm going to slow and steadily increase it above 1 million. And then from one property, I'm going to go to 2 properties, then 3 and 4. But initially, I would also say invest in an off plan and a ready property. Even if it's a 1 bedroom, invest both sides so that you start building on that. If you're just investing, don't invest in one. Diversify to start with. If your comfort level is ready property, 75% of your fund should go to a ready property and 25 still should go to an off plan.
That's a good strategy.
75 or 70-30. Maintain that. 70% do not invest 100% of what you have in a ready property. Invest 70% here and at least 30% in an off plan project. First year, the cash outflow is going to be around 30-35% because 24% is the down payment plus the DLD fee and another 10% is taken that. So 30-35% is what's going to be accrued in the first year. And then your secondary ready property is going to start generating some revenue, and that can be diverted towards making this thing more functional and more viable, and to ease your financial pressure for the first year. But always have that strategy, because when you sell this, which you bought ready, your capital gain is not going to be that huge. You will have a very nice capital gain, but the capital gain is not going to be 100% or 150%. You may have it, but it's not 100% surefire. So once you have that, 3 to 5 years, this is ready. Sell this, invest in one off plan, one ready. So now from 2 properties you have 3, and from 3 you will have 5, and from 5 you will have 7, and that's how you grow it.
And you're headed towards generational wealth.
That's how you are heading towards generational wealth. And then you keep on looking for opportunities. What I do is I will tell them, if you have 5 million, have these 3 things, and keep, to start with, keep 500,000 to 700,000 for any solid deal that comes through, any distressed deal that comes through. Keep this funds, keep this amount ready for that distressed deal.
Because once you're in the game, you would know of things that come.
Once you have, so once you're in the game and you are communicating with me on a regular basis, I'll tell you, you had those 700,000. I have an amazing deal. This thing was for 1.5 million, 1.6 million, even 1.4 million. The seller is in distress. Let's close this at 800,000, 750,000, 900,000. Close this. Have that initial capital gain, and your rental value from that is going to be exceptional as well, because the rental value is being calculated on the OP, original price, and you got a distressed deal. So your rental value will jump from 7 to 8% to up to 13 to 15%.
And a real estate broker like you, a professional like you, that's your job, isn't it? That's your job. Somebody, I've this person's portfolio. I have to keep them in mind 100% all the time. Anytime something comes up.
Also, Asad, it's very important, because every quarter we will do a review. If not more, then at least every quarter, every 6 months, annually, we need to set up goals. Okay, these were the goals of 2024. We had to take your rental yield from point X to point Y. Your capital gain was here, and that capital gain I need to augment by this much. And this is the strategy I propose. And then you hammer out iron out the details, and you sit with them and you discuss and you finalize the strategy. That's what I do. That's my core expertise, is to have that strategy developed, discussed, in placed, and delivered the results. That's what the core issue is, which people are not doing.
Last question, lighter one. If what's the good age to, if you were speaking to your son right now? Your son is 23, 24? 24. If you were speaking to, if he was watching this video right now, what would you say to him? Son, start at, finish the sentence.
Start as soon as you get your first job or you start earning. The first paycheck that you get, you have to start putting aside money to be invested, and then that growth has to be done. The first paycheck, your thought process should initiate from the first paycheck that you get in your hand. I know there are, in this world, there are a lot of glitz and glamour, and there are a lot of distractions.
Young people spend their money on to things.
That is also goes hand in hand. but having a plan in place. I met a lot of people who said this. Ask him, if somebody told me this 10 years ago, I would have been in a much better state. If somebody just sat me down and went through my financials and told me a game plan, shared a game plan, refined my game plan, then I would have been a much more happier person and a much more financially secured person by now.
That's real. Excellent. I think this was a very, and we'll keep talking about this.
Yes.
There's so much to discuss. We'll have more episodes. But on this note of a piece of advice to younger people, hey, now you know what the right age is, or when you should start and when you should start taking this seriously. And it's easier than you think. I think on this note,
With the blockchain, it's easier than you think.
Even
Now, with the blockchain technology and whatever is coming up in real estate, the fractional ownership, all those things. So it's becoming much more flexible and easier for you to start at an earlier age.
Love it. That'll be all for today's podcast. Thank you for joining. Let us know if you have any queries or questions. If we haven't answered them already. But I'm sure there's always questions because everybody's situation is different. We will be on hand to deliver as we do every time.